Tim Stenovec, 6 straight days of gains for the S&P 500, a pretty decent rally over those 6 days into what's about to be a fire hose of earnings over the next 3 days.
Yeah, the question is, do the earnings that we get over the next few days change the tune? Because we have seen a lot of buying, Emily, over the last 6 days. The S&P 500 up close to 8% just in that period of time.
Yeah, I mean, the word on the street, at least if you look at what JP Morgan's trading desk is saying, is that the near-term momentum is risk on. The direction of travel is up. No matter what happens later, at least for right now, there's green on the screen.
And it's also worth noting that at least for today, the indexes hit their intraday highs when there's some comments from Trump surrogates, Howard Lutnick, Stephen Miller, suggesting that deals are closer to getting done. And that's certainly helping to support sentiment, at least.
And at least we heard from the White House as well that an executive order that Trump signed tackles the cumulative effect of overlapping duty on cars, which goes to the point that Jay Woods was just making on air with us, that maybe that bottom is actually in. But now, what is that top that we need to be looking for?
Yeah, and that's the question, though, too, right? I mean, it's easy to sort of look at the big gains that this market has made just over the past few days and really the last few weeks here. But, of course, you have to remember the starting point of where we were at the beginning of this year, or at least at the beginning of this administration. Still a lot of room to go in order to claw some of that back. We should point out, over this 6-day stretch, you are looking at an S&P 500, but it's actually up 8%. That includes 8%. That includes a gain of 0.6% here on the day. It's going to close out right around 55.60. The NASDAQ composite up about 10% over that stretch, is up 95 points today, or 0.6%. The Dow Jones Industrial Average adding 300 points, or 0.8% here on the day. And the Russell 2000 getting in on the action with a gain of 0.6%.
All right, well, the gains pretty broad-based. 3 stocks higher for every 1 stock that was lower in the S&P 500. 370 to the upside, 133, Romaine, to the downside.
All right, let's get to Qorvo, a maker of special components that go into smartphones and other devices. The company reporting revenue for its fiscal fourth quarter, adjusted revenue of $469.5 million. That does appear to be a beat. The street on average was looking for roughly $851 million. Adjusted EPS also a beat, $1.42. The street on average was looking for 99 cents a share. Not really seeing any guidance jump out at me at the moment here, but you are seeing a slight move in the shares higher, up 5% in the after hours trade.
All right, and let's also get a read on travel here from online booking company Booking, reporting first quarter revenue beating analyst estimates, $4.76 billion, higher than what was anticipated, which was just under $4.6 billion. Gross bookings also beating analyst estimates at $46.7 billion. First quarter room nights sold, 319 million, better than the expected 316.6 million. And first quarter adjusted EBITDA also topping the $1 billion mark, $1.09 billion. Analysts were looking for 849 million. So that stock right now marginally higher in after hours trading by about 0.25%.
All right, taking a look at Caesars Entertainment. So for the first quarter, they had a loss about 54 cents a share on net revenue for the first quarter, about $2.8 billion. And their same-store adjusted EBITDA came in stronger than estimated, and their same-store net revenue sales came in bang in line with estimates. Remember, they had a tough comp period because of the Super Bowl in Vegas last year. They do point out the 2025 free cash flow will show significant improvement.
Yeah, also going to be listening on that call for any commentary about what's going on in Las Vegas. We've seen some anecdotal reports of decline in visitors to Las Vegas. In the meantime, I'm watching First Solar and seeing what's going on with First Solar. First quarter adjusted earnings per share coming in way below estimates, $1.95. Estimates were for $2.48. The first quarter EPS missing estimates. The operating income coming in below estimates as well. First quarter net sales coming in shy of estimates. Shares down 6.66%, Emily.
All right, Tim, I'm looking at Trivago. The first quarter coming in at a loss per share. The first quarter revenue also looking just actually beat estimates here, 1.24.1 million euro versus estimates of 110.7. That's all we're getting from Trivago right now.
Kind of interesting, too. I mean, when we talk about the sort of consumer spending and you take a look at what we're learning out of Booking, what we're learning out of Caesars, and then you take a look at Trivago, and then you overlay that with what we learned earlier today out of Royal Caribbean, it's kind of interesting to see that this might not necessarily be the type of economy and the type of read on consumer spending that is going to be sort of cohesive and all as one. You're going to see layers and you're going to see pockets of that. And I think that's reflected in the numbers that we're getting here in the after hours trade.
And to that point, companies are really making a point of buying back their stock, also increasing their dividend or making sure that they stay current on their dividend as a way, because that's a way that they control the variables that are within their control, right? Because the macro environment is all kind of beyond them. But what you can do is manage your cash and return cash to shareholders. And the case of Booking, for instance, declaring a cash dividend of $9.60 a share, and also talking about their stock buyback program as well.
Let's go back to First Solar for a moment, guys, because that stock's down 14%. Their updated outlook reflects expected tariff impact. Remember, you have a tariff impact from solar imports. That's going to affect the guts and stuff of what we do to build solar panels. They look at their full year operating expense at the high end, about $510 million. Now, the CEO in the earnings release says that despite near-term challenges presented by this new tariff regime, they believe the long-term outlook for solar demand in the U.S., particularly in that core market, remains strong.
We also are getting some breaking news coming from the healthcare space. United Health names Patrick Conway, the CEO of Optum. United's Heather Cianfrocco is taking a new EVP. This is coming from an 8K that was just filed. I'm looking at shares of United Healthcare in the after hours right now, and they are unchanged in the after hours. But once again, United Health naming Patrick Conway as the chief executive of its Optum group.
You know, I'm really looking at that booking number and just wondering how much of a read we can really get here on the macro environment, particularly because these results are backward looking. I mean, this is the first quarter. This is really coming before all of the headlines, and we could call it, uncertainty about tariffs here. We'll see how that weighs on the guidance.
Well, one company, of course, that could really be affected by this is Starbucks. So shares moving lower in the after hours trade. The earnings crossing the wire right now. The company saying that in its most recent quarter, the fiscal second quarter net revenue came in at $8.8 million. That's basically on the nose. The street was looking for $8.83 billion if we want to be precise about it. Comp sales overall did drop, down 1%. The street was expecting a drop of about 0.6%, so slightly worse than what the street was looking for. U.S. comp sales, that was decidedly worse, down 2% in the quarter. The street was looking for a drop of only about 0.25% on the quarter, so a big miss there. Adjusted EPS also missed, 41 cents a share. The street was looking for 49 cents a share. I'm still looking for some guidance here, but the company basically, for all of the major units that it has, certainly here on the U.S. side, it does appear to be a miss, including in North America. The one bright spot does actually appear to be international sales. Those comp sales actually rose unexpectedly 2%.
All right, let me jump in here with Mondelez, the packaged food company, seen as more defensive in these kind of uncertain times, reporting first quarter adjusted EPS of 74 cents. The overall headline number for EPS was 31 cents. Net revenue coming in just a little bit shy of analyst estimates. You could call it even. First quarter net revenue of $9.31 billion. And in terms of its outlook, it sees full year organic net revenue of about growth of 5%. Analysts were looking for just about 4.9%. So that's slightly better than what analysts had been anticipating. You're looking at the stock moving slightly higher right now, up about 1/3%.
Just want to hit quickly on Edison International. Operating revenue for the first quarter came in light, even though core EPS actually beat. The Eaton fire investigation is continuing. The company says it's working close with state and county leaders. We will have the CEO on tomorrow at 3:10, Pedro Pizarro, CEO of Edison International.
Well, Visa shares spiked and then they've come back to earth a little bit in the after hours, just up about 0.5 percentage point. The company has authorized a new $30 billion share buyback program. In terms of numbers that the company reported, second quarter net revenue coming in above estimates at $9.59 billion. Second quarter adjusted EPS also a beat. Second quarter total Visa processed transactions coming in shy of estimates at $60.7 billion. The company declared a quarterly dividend of 59 cents a share. Once again, shares of Visa in the after hours higher by just about 0.1%.
And looking at Mondelez again, the outlook does not reflect potential tariff changes, the company said. It's a similar theme that we've been seeing a lot of companies say now, that they just, I guess, can't yet price in the impact of those tariffs.
And Seagate earnings crossing the wire right now. Of course, this is the hard disk drive maker. Shares higher by about 7% in the after hours trade after revenue in the most recent quarter jumped 31%. That was relatively in line with estimates, $2.16 billion. The street was looking for 2.13, and adjusted EPS also beating $1.90 a share. That's a huge jump from what we saw the previous quarter a year ago when they posted 33 cents a share. That $1.90 beats the average of street estimates of $1.73.
Okay, Caesars, Mondelez, First Solar, Visa, Edison, Starbucks, Snap we're still waiting on, but we certainly went around the world when it comes to today's report. A little warm up for what we have coming later this week with mega cap tech. That is going to do it for our cross-platform coverage of the market close. Emily and I are heading back to radio and YouTube. Alix is heading out. Scarlet and Romaine are going to continue on TV. We'll be back tomorrow, same time, same place, right here on Bloomberg.